Stephen? You want to push your laptop down a bit because your head's halfway.
Is,
Yeah, that's true.
is
No.
my head supposed to be higher up than
Yeah,
halfway?
yeah, higher up. You usually want to go third, top thirds. All
There you
right, so
go.
here we are. Yeah, we should be live now. Just waiting for it to come up on YouTube there. Yep. All right, sweet. So there we are.
Hi all.
Welcome everybody. So
G'day.
this is our third podcast. Today we have the man himself, Jason Pizzino. Introduce yourself.
Thank you. Yeah, thanks for having me on. I do YouTube and Twitter, but I started from investing from property, then into stocks and futures markets, and then crypto is where we've ended up. So now just shill absolutely everything on YouTube for people. Not really. No, I help people with trading and investing from my
Yeah,
experience.
he's been awesome so far. We've had a few good conversations, and then obviously, Charlie's paired up with VyFinance, which is CEO Stephen Ward over here. You want to say hi, Stephen?
Hi everybody. Yeah, so I'm running VyFinance and my background is hedge fund trading and investing. So
Yeah.
that's why I'm really pumped to talk with yourself and of course Jason, who's got a lot of experience in the area as well.
Yeah. I mean, you guys are
Good fun.
definitely far and above me. I'm the fledgling in this area for sure. My whole background is medical sciences mainly. So this is foreign territory for me, but I feel like I've been doing pretty well so far for my like 1 year in the game. So
Well,
yeah,
you got
I
the
think
timing right.
yeah, I
Yeah,
know, right? Yeah,
I
came
also
in right for a good dump.
you pivoted a long way from helping people, I'll tell you what.
Yeah, definitely helping myself out a bit now. I mean, that's the long-term goal of investment is just to try and get back to that kind of stuff, but more environmentally. But that's another
Oh, of
podcast.
course.
So,
Of course.
well, yeah, I just wanted to right before we get off the bat here, I just want to do a little shill for my own self because I forgot it on the Cardano Live podcast this morning. As we have our Fund 6 proposal up. I know voting is on starting on that soon, so if you could please follow the links in our Twitter and go give it a thumbs up or a clap or whatever's there for the Fund 6. It's all for the community. We're giving funds back to the community to help run Oracle services for free for different projects. So we are not taking any of it. It's all to give back. So yeah, so there we go. We'll start off, and I'm definitely interested, Stephen, more on your side of things on the hedge funds and like how that can tie in to other types of investments, maybe like where Jason's
hmm
background is in more real estate and stocks investing
hmm
in that way,
I,
right? So
it can absolutely tie in everywhere. One of the biggest follies I think you find that particularly new traders make is not recognizing the motions, moves, or thought patterns being used by institutional investors. And institutional investors functionally control a large majority of the liquidity in the market.
yeah,
What makes an institution move is very different to what makes a retail trader move for many obvious reasons, right? They're working on a different game. They're working on a different level. Um, and if you lack that insight and understanding, complete insight and understanding into how institutions are moving themselves, you can find yourself caught out in the wrong direction of the market on many occasions. So it's always important to sort of understand the logic that underpins what's moving institutions, which is mostly based around liquidity management, and it's based around ensuring that you have the funds to cover costs for operations over X period of time, right? So, and that's something that, a lot of people, I even saw someone on Facebook one day, right? This was only a couple of weeks ago, right? Oh, I don't understand. Why would people take profits when you can just put profits into more coins? And it's like, well,
you need to
at
live, you
yeah,
need, you
at
need
some
some
point
kind
in
of
time,
profit.
I need to sort of pay for my mortgage. I like to go to the movies occasionally, maybe buy food.
Yeah.
um,
Well, I
so,
mean, if our general topic is investments, I think that's called investing in yourself, right?
yeah, exactly.
Yeah, yeah.
Um,
And putting
so
it back into your mortgage, right? That's tying on into another thing. I mean, that's real estate investing in to a point, even if it might just be your own house, right? That's your own
mhm,
investment side of
that's your own
things.
investment,
Yeah.
right? And within that, and institutions are thinking in that same manner to say, like, for example, we might be coming into a liquidity crunch, and I'm sure we'll get into talking about that later. And then I'll move on to Jason. Sorry about this.
No, no.
Um, And then since we could be heading in towards a liquidity crunch, all of a sudden you'll find companies and institutions hit a point where, oh, we need liquidity to cover interest rates, to cover costs, to cover wages, to cover staff. Now, repos have become incredibly expensive. I'm not sure if you know what repos is. That's the repossession market where businesses can exchange assets for liquidity. And then if you start having a stem in supply of the repo market, where do these businesses receive overnight funding? Well, their only choice is to liquidate assets to cover overnight funding, right? So now when you have retail traders asking yourself, oh, I don't understand why you'd take profit, and then you have the market dump 20%, well, that's because the retail trader hasn't taken into account that people who are holding this actually need to pay staff. They actually, it's not like a sell by choice. It's a sell because, oh, we need to access liquidity to be able to cover things.
Yeah, and that comes into like, but then that has that cascading effect, you know, that everybody's just gonna sell off and have that fear. And I mean, Jason, we've been seeing that a lot in the market. I know you follow that a lot, you know, stocks wise and crypto, right? Like it's just so emotional, you know.
I definitely see that, and that's, I guess, for like a retail, an easy way to understand it would be, say, Bitcoin mining. You can't just mine all the Bitcoin and then hold it forever. It needs to be sold to pay for costs. I think that's kind of like an easy way to understand it too. What's that?
Are you sure? Because I wanna hold all the Bitcoin.
Hold all of it. Yeah, so they need to pay for costs, and you know, it puts pressure on the market. And if Michael Saylor's not buying, then the market comes down. Or if El Salvador's not buying, the market comes down.
Now it is. Yeah, that's exactly what it is. That happened the other day. Yeah, when that dump happened the other day, I'm like, what is that? What? And I was like, oh, it's El Salvador. It's live now. Okay, gotcha.
Yeah. Then they said, we're buying more, and said, sweet, we're going to dump more on you. We need to get rid of this, pay off some debts. I think what you're saying, Stephen, like, it's nice to understand it from, I guess, the hedge fund point of view. You know, I'm just trading and watching the charts. I like to use volume analysis, which is, of course, like Wyckoff accumulation or distribution analysis, Gann theory for all my trading. So you can see this happening in the chart once you watch it time and time again. And then what you've talked about is like the reason for it happening. You know, I'm watching, I'm like, oh, there's not much volume coming in here, and you guys are just waiting for certain things to happen. And then all of a sudden the volume just kicks in. You're like, all right, this might be a reasonable time to buy. And then more volume kicks in and the market reverses. You're like, something's going on. You know, they're either buying up again because they think it's cheap, or, you know, they're just selling off some position before it comes down again. But you can sort of see what's happening when you follow the chart long enough.
Absolutely. And what you actually just described there is the best way to actually gain an idea, an insight into what institutions are doing. Excuse me. And that's not
because it has to be tracked on the chart. Like can you buy and sell without your volume going onto a chart?
Yes, you can.
In massive volume though?
Yes, that's called a black pool.
Is that legal?
Yes.
No.
Yes, it's absolutely legal. So they're off order book exchanges, right? So if you think about it, rather than just
but that's got to come onto the market at some point. There's not like a whole system going on in itself somewhere.
No, it can be a separate system, because you can do an off order book exchange by saying, hey, you're a private party who's got $400 million worth of stock. I'm a hedge fund who needs $400 million worth of stock, and I don't want it to show up on the order book. I'm going to privately purchase the $400 million worth of stock. So now it actually only shows in the transfer system. In Australia, it's called chess, where they keep track of who owns what stock. So now literally you only have that show up in the transfer system. You don't actually show it up in the chart whatsoever.
But it's had to come off the chart at some point, and then it has to go back on the chart at some point. Not if
it's held in just someone's private accounting book, and then they just transfer it from one accounting book to another. And then they've just transferred.
But then it doesn't mean anything on the market. So the market is still doing its thing.
It doesn't mean anything on the market. It doesn't mean anything.
But you won't affect the price.
The hedge fund decides to use it. Not in that trade. No,
I like this.
Not in that trade. You won't be affecting the price in that trade. But now a hedge fund party who may now have the intention to sell that to be able to cover some other hedge, right, has just been able to purchase an amount of stock through an off-book mechanism, and they can now use that stock to perform functions that you wouldn't know that a hedge fund's going to be able to perform, because you don't know a hedge fund's holding 400 million of that stock. There's entire functions called black pools that have developed so that hedge funds and high-end institutions are able to make exchanges off-book, entirely off-book, right? And the reason they do that in large part is for, and this is why I really don't like it, is for spoofing. Right, so these businesses are able to accumulate hidden portfolios they can use to spoof with.
Yeah. What percentage of the market do you think that makes up?
I'll quickly Google that for you. Just one sec.
Yeah, because I can imagine that with all this spoofing and stuff, and it can definitely change the retail investors' idea of what they're going to put into things, right? And completely
They're
manipulate.
not, by the way, they're
what's
not
happening.
black pools. They're dark pools.
Ah, well, close
That's
enough.
what Ren was doing, wasn't it? We're not trying
Yeah,
to
that is
shill
that
Ren.
is what Ren was.
Yeah.
That is what Ren was doing. Yeah.
Yeah.
I'm just having a look here.
I would imagine it's not a big enough percentage to really, do too much to the market because you're still seeing the volume there.
You'd be very surprised, man. Like, and you are still seeing volume there, absolutely. And that's just because the
Yeah.
volume, particularly now with quantitative easing and there you go. In the United States alone, estimates suggest that 40% of all executed trades are completed in a dark pool, and about 20% in Europe.
40.
So yeah.
So then
they're
they just
talking-
use the data. They use the data that's there. So if Apple's trading on the open market, they'll use the Apple price and then just have their own black market, dark market to use the same pricing.
That's it, right? And that means
Yep.
that they can start accumulating books completely hidden. Now, in one sense, that is, for the retail investor, that's incredibly dangerous, right? Because that's essentially how you have massive motions that come out of nowhere that you have no idea with what the hell's going on. It's essentially because people have accumulated against your knowledge, dumped or pumped.
But then they got to bring that back onto the market, or if they're dumping off the market in these dark pools, it's not going to show up on the books anyway. Someone will have to buy it.
That's interesting that you say that, because remember, you can create an arbitrage. You can create an arbitrage, right? So you know that let's say you have the knowledge that someone's just dumped it in a dark pool.
Before you continue on their statement, why don't you explain what arbitrage is for the people who might not know? Yeah.
So an arbitrage is essentially when you take advantage of prices between different markets. And that involves buying on one market, selling on another, or selling on one market and rebuying on another. And that's because the markets, due to natural supply and demand, will have slightly different prices between different order books, right? Now, if you recognize that, let's say you have the knowledge that a dark pool has just dumped the value of a stock, right? I.e., you know that a dark pool has just sold a very way. Dark pools don't necessarily work off just fed order books. They do have their own pricing mechanisms.
Sure.
If you have that insider knowledge, now you know that the real demand on the market is different to what the demand that's being shown on the real stock market is, right? Why? Because 400 million has just been sold off the books. So now you know that there's going to be a misrepresentation between the price that it's being offered to institutions against the price that it's being offered to the retail public. That now gives you an arbitrage opportunity to sell it on the main stock market before the price has been able to navigate itself through from the dark pool markets and been completely arbitraged into the retail markets. So yes, it does impact supply demand, but it's secondhand.
Yeah, and it doesn't sound like it's a good thing for retail who are trying to do trying to be day traders on short-term timeframes. So I definitely don't like that at all. Longer term, I mean, look, I think it all shows up. What you're talking about, it all shows up at the end of the day. You either play on the dark market and eventually it has to come back onto the order books and you'll see it there, or they just keep playing on the dark market and they keep arbitraging between each other, and then it shouldn't affect that market anyway. It only affects it once they start to say, well, it's going to be cheaper for me to go and buy it on the main market or sell it on the open market, and then it has to affect the books anyway.
Which is unfortunately exactly what happens.
Yeah. And so like you said, that's another, that's a massive reason not to be day trading as a retail investor. It's the hardest job in the world, which doesn't guarantee any pay, and then you're up against huge professionals. But when we get into a bear market,
investment journey on just stocks and day trading, frick, that's rough stuff, man. It's so hard.
Very rough.
And
that's what all crypto investors, investors just say, bear market comes, how do I make money in a bear market? I'm going to start day trading. Who's got signals? I'm going to go into their group. And you're like, it's just a recipe to lose more even faster.
No, you just hold the bear market. just hope for the best.
Sell off.
I think
walk away.
USDT up, right? Just hold it. Maybe not T, maybe USDC at this point.
And there's a lot of ways to make money in a bear market. Like, in fact, I would say there's just as many to make money in a bear market as there is in a bull market.
Many ways, maybe not amounts. Yeah, but
depends about percentage swings.
Yeah, I mean, you're right. I mean, you're definitely better at that. I know you do your farming pools and different things on the side that manage on percentages, but not on amounts of whatever they were actually worth. So, I mean, definitely there's other ways to manage it. And I think just the education, you know, even talks like this should help out the regular person investor. But like, I want to, like, we can all talk crypto all day, but I want to maybe touch on some of the more typical investment opportunities. You know, generally what people think investment opportunities, if they're going to get into it, is going to be things we touched on already: stocks and real estate. Right. And I know, Jason, you have more of a real estate type of thing. I know, Stephen, your dad was a real estate monster. Right. So like, I think you guys both have, like, that's something that I think that the regular person more comes to mind as far as where to put their money, like long term, and how that is shifting now with so many different things like crypto. So like, what do you guys think
It
still
definitely,
about
maybe it's
those
more here as
markets?
well, but I think the US has it. You know, in Australia, it's just like that's the only thing you do is buy property. I don't remember the stock market being such a big thing for retail like 5 years ago or 10 years ago, and
No,
only
no.
for Australians anyway. It's only
Mm.
been YouTube that I think has really made it a little bigger for us here. So it's always been
Yeah.
buy a property. You know, it's the thing you need to do. So I guess that
Mhm.
that weighs into the market psychology of it. That's how you get rich here. You know, you go on your negative gearing, which is what we have in Australia, and it's just the same
God,
Yeah.
negative
stuff.
gearing.
It's really
Just
the same
Yeah,
stuff over here.
just
Like, I've
for
done Canada, but like, yeah, it's still just typical old school, you know, work for forever,
yeah.
put your money into real estate and just sit on it for 40 years and hope it works out for you, you know? Like,
mm, just for
Leverage
briefly
up,
for those that don't know what negative gearing
negative gearing.
is,
Mm.
if you in Australia invest in a property and you make less in rent than the property costs in interest, you can tax deduct your losses. So essentially, if the rental property costs more than you're earning from it, it becomes a risk-free investment because you can well, not risk-free, but it becomes a portion of it risk-free because you can tax deduct the difference.
yeah.
Essentially, if your
In
business that you've invested a lot of money into, your business, which is your rental property, makes a loss, then people are happy and that's what they want so that their personal income can pay less in tax.
It's
can
so
pay less in
interesting to think
tax.
like, yeah, I made a loss. Haha. You
Yeah.
know, like,
Yes,
it's never something
which
I'm excited about. But in that
which is
case, yes, you're right. I mean, I'm talking about doing that. And now, and I know so many people that do that with art too, you know,
mhm,
general investment, they do the same thing with art for tax write-offs, and you can talk about it as a loss, or um, you know, it's there's so many ways to
does
evade
that
in
include
sneaky.
NFTs?
It does. Yeah.
Now
It's
I
not
see why
evading,
now I see why they're
it's
spending so much
minimizing.
money.
Jason,
Yeah, it's
don't you
minimizing.
dress it up in a different way.
It's not evading, it's minimizing. It's all
Okay.
legal.
Oh yeah,
Hey,
I know it's legal.
Evading is
as
illegal.
as
Yeah,
long as I'm
fair
making an
enough.
NFT and getting paid for someone else to minimize their tax, I'm absolutely okay with that one.
Yeah. Yeah, the whole NFT market right now is pretty crazy. I understand certain ones selling for decent chunks, you know, things you can definitely tell there's been a lot of money put into it, but other than that, it's pretty bonkers to me. Like, certain ones selling off for millions. Like, I feel like this is just the regular art world coming into things again. You know, sell
Mm,
this thing here and then go somewhere else and sell it off, and then you don't pay your taxes and it's a write off, and it's crazy, you know. So, but
it is
hey,
a wild place.
listen, jump through loopholes. That's what they're there for. Why not have
Um,
some fun?
one of the biggest
Yeah.
things. So my background when I was working, actually, I'm interested, Jason. What futures were you trading?
I was looking at gold, oil, corn, soybeans, cotton. I put a few
Mm-hmm.
trades on pig bellies.
Mm-hmm.
I was a trader, so I had my my plan, and then it was
Mhm.
just like whichever market was showing the signal, I'd follow several of them,
Mm-hmm.
and then just put the trades on.
I was
Mm-hmm.
doing
Portfolio.
lithium last thing I did.
Lithium
Yeah.
markets are good
Lithium.
fun.
Yeah, it did,
Um,
yeah. Continue.
I was just going to say corn soybean are one of my favorites. The corn soybean seasonality spread is fantastic because they're equivalent products on opposite seasons. So you can generally just sell corn when it's coming to the end of its season and buy soybean, and then they like swap, and then you just
Hmm.
swap it back, and you've basically got this cycle between corn and soybean. So that's a fun cycle to take advantage of. Another one, because my background as a hedge fund trader was in futures. In fact, I was working in bond futures for Australian notes, American notes, and British notes, and some German notes. Um, and particularly when we're talking about real estate markets, I mean, the current state of the interest rate market is absolutely fascinating in how that's impacting current real estate prices around the world. Because we've had this decreasing interest environment now for how many years, Jason? Like 5. Like, how long have they been dumping
interest rates?
Yeah, how long have they been
Interest
dumping
rates have been
interest rates
down
for?
for like what, since 2008?
Yeah,
We went up a
2008
little
forever.
bit, then we kept coming down. Yeah,
Yeah, that's
never
it,
went back
right?
to those highs of 2007, 2008 here. I remember I was
Never.
paying close to 10% interest on one of my properties. It's like 9.9% interest. You're like, it was what you paid at the time.
It is what it is. Yeah, my grandma was paying 14. No, my dad was paying 14% on his first home, 14 or 15%.
That's pretty crazy.
That
That's
was
a
the
lot.
80s and 90s or 80s.
Yeah,
Yeah.
80s. But that's
Yeah.
what was expected out of housing. You know,
Oh, you
like,
could put the money in the bank though, and you'd be making 7% interest.
that's
Yeah,
it,
That
right?
doesn't
And
really
that's
work
it.
anymore.
But
Yeah.
now that we've entered this incredibly low interest rate environment for such a long time, remember, the level of interest represents the cost of debt to individuals. So that means that the higher the interest is, the lower your demand for debt in general, right? So as we've spent years and years and years suppressing interest rates, we've essentially pumped demand for cheap debt.
Mhm.
Now, when we're looking at situations like, and this is similar to exactly what's happening in China right now, when you're looking at situations
Good
in
segue.
countries like, yeah, segue, right? In countries like Australia, our debt to GDP ratio is pretty good, right? We're only at about 70%. So I'm not too worried about a real estate market in Australia just yet, because at the moment we're not over leveraged in the sense that the population can still afford its costs. When you're looking at places like America, where you've got a GDP to debt ratio of 135, 140%, you always run that gambit that we did in 2008, where it is you've got high leverage ratios, you've got high debt levels, and the second they turn off the money taps, no one can afford it anymore, right? Now, in 2008, that money tap was turned off because of market forces. Now, I don't know what's going to turn off that money tap, because the Fed has decided, oh, well, we'll just print money infinitely. That's fine.
Yeah.
Wait,
Well,
inflation, that's not a thing, right?
that
Whatever.
seems to be working out just fine so far. That's not going to worry. Not going to worry about it.
Yeah, nothing to worry about there. And that's why when people tell me, oh, I hate the crypto markets, the risks are crazy, why would you take that? And then you look at the stock market and it's like a straight line just going up. And then you look at the crypto markets and it's like there's pumps, there's dumps, it's up and it's down. And I'm like, well, which one looks like a healthy market to you? The one that goes up in a straight line because it's being artificially pumped by the Fed, or the one with pumps and dumps everywhere because no one knows how to properly actually value it? That seems healthy to me.
Yeah, we
A
get
straight
clean
line.
outs.
Yeah,
We
you get
need the
clean
clean
outs.
outs. Yeah,
You do.
the US market doesn't allow clean outs anymore, but we'll get a big clean out in the US.
Oh, fuck me.
I don't think next year or
sorry.
year after. I'm still looking at
Yeah.
2026 and beyond, something around there.
I mean, people are calling for it right now. I've got a friend here.
No, they're all wrong.
She's
I'll
doing
say it now.
PhD in finance, and I'm like, I don't see it. Not yet. Things aren't. I don't feel like things are so imbalanced that they're about to drop. But yeah, you can definitely get there, and it's
We can
gonna
get a
happen
correction.
eventually. Yeah, a small correction somewhere, but they're like, oh,
Yeah.
everything's gonna crash like 2008 again. I'm like, I don't think it's gonna happen that quick. I mean, 2008 was like akin to the 30s, but I mean, that's not going to happen every 10 years.
Well,
Yeah.
2008 was only akin to the 30s because of the fraud that was taking place to ensure that no one was able to notice what was actually happening. The actual financial instruments that they were using were being priced in a manner that wasn't representative of the underlying asset, right? So that was very much something that
people into a panic, like when that stuff happens, right? It just drops
exactly.
everything. Yeah. So I mean, that just happened right now, right? With the Chinese, what's the company?
Evergrande.
Evergrande.
Evergrande, right? So like
is
that
it
just
Evergrande?
happened.
That's what I say.
Sure.
I want to say Evergrande. I always want to say it because I'm Italian. So to me, it's Evergrande because that's how they spelt it. But then I'm watching YouTubers and everyone, and they just say Evergrande. So I'm like, all right, well, I guess
because we got to Americanize everything.
Yeah, I don't know.
No,
yeah, okay,
it's
cool.
like a Starbucks coffee.
Yeah,
that's a great point.
Evergrande. Yeah, it is big, that's for sure. But like, I mean, me and Jason were just talking about this right beforehand, before we went live here, and it's just like it's been going down for 4 years already. Like it's nothing new. There's no reason to lose your mind over one thing. I mean, also this is one company in the entire world, you know, like why should that make a difference for anyone else? But it spooks people, and even if you're not
Well,
very spooked,
can
you
I
think other
can I
people are
answer that one?
spooked, and so
Can I
you
answer
go
that one for
crazy.
you? Can
You
I
can
answer that one
try.
for you? Yeah, absolutely. Okay, so Evergrande is the second largest property developer in China. Now,
Yeah.
within that, their financing model functions wherein they accept funds from retail investors to purchase a home prior to that home being built. They take the funds that they've just purchased and they use that as leverage. They take that leverage to then take out a loan to then build the property, but it's generally pretty well capitalized, those loans. They're not low capitalization. We're talking generally 40 to 70% capitalization.
Yeah.
Then they build the homes and then they get the rest of the money off the people to cover that loan, right?
So for people
Now,
who don't understand, maybe it's a $500,000 property. They have to put in 40%. So, what's 40% of that? 200 grand,
uh,
and then they
yeah,
come back and get the 300 off them afterwards. Similar to
yeah,
what would happen here. Oh, we only have
mhm,
to put down 5 or 10%, I think, if you're doing a new build from a
very
developer.
big
Yeah.
difference.
Same thing here.
Yes,
Yeah.
Yeah.
absolutely. Which is
Mhm.
one of the
Yeah.
reasons why I'm actually less worried about this collapse in China, because China's minimum debt to thingy ratio, I've forgotten the word now, is 30%. So no
Thingy
one's
was
Uh-huh.
really
as well.
purchasing these homes without 30% down, right?
Mhm.
But what is worrying is that this entire model for Grande, sorry, I want to say it how I want to say it.
So
Whatever.
Evergrande.
This
No
model
one's
started
corrected me
breaking.
in my YouTube comments. I've said it Evergrande. No one's
Perfect.
corrected me. Yeah.
That's good
Confidence.
to know.
Confidence is key.
Yeah.
Confidence. Yeah, the
But
problem
then
with
no one
Evergrande.
can correct me. That's how it's said. Sorry, go on.
Yeah, exactly.
Sorry, that made me
Sorry.
laugh. Um, that entire model is broken down. That entire model completely broke down. Now, the reason that broke down was because they weren't meeting the demand to actually be able to retrieve those deposits for the homes that they required to be able to meet their capitalization ratios for the houses in the first place. So then, what happened is Evergrande decided to get sneaky. They got really sneaky. They thought to themselves, okay, we can't collect the funds that are required to get the money in the first place to be able to put down the money to get the debts for these homes. But what we can do, if we don't sell out a home prematurely, we can still build that home and then we can put it on our asset book. So basically, they would start building up houses and then they'll just say, well, we sold 4 of them and we got 2 left over. So these 2 are on our asset book. And now what we can do is we can take out loans against these homes that are on my asset book, right? Under the presumption that they'll get sold in the future. And then they would start leveraging previous structures that they owned, right? To then be able to get new structures built while still accepting smaller and smaller values from the public. So they started reducing the costs of their deposits. So now
Right.
you've actually got this switch where that cost has moved to the burden of financial institutions rather than the burden of retail investors for the most part. Now, that is a good thing. That is actually something I like about the Chinese system in general, in that it does have mechanisms to protect retail investors. But now that means that if Evergrande collapses, it's banks across Southeast Asia that are going to be bearing the brunt.
Yeah, you're totally right, and like this is why I don't feel like there's going to be a huge issue because of such a cascading effect from it. I'm not underestimating the potential government bailout situation. You know,
Oh,
because of
don't expect a government bailout.
I'm not expecting it, but I'm not discounting it, right? Because it's a larger, potential problem
My,
in that area of
I
the
thought they
world.
were bailed out this morning.
Were
were
they?
they already?
Yeah. See,
120 billion.
I wouldn't. Yeah.
Fucking
See, I
Oh,
wouldn't.
China.
See,
hold
there
on.
you go.
Lies and
It
lies
says
and
China. That was yesterday. China injects 19 billion to bail out Evergrande. Here's how. Look, that's on a crypto website. I thought they were in talks for about 120, but look, that was. I
Still,
don't know if it's
I
been.
mean, that's
Yeah.
still something, right? Like it's still something to keep them afloat and keep it coming
I
back, and
reckon
then whatever.
I reckon
So
China's probably helping them out for this one interest payment because all I can see here
Mhm.
is from the Foreign Policy Review asking the question, will China bail out Evergrande?
yeah,
But um,
Uh-huh.
I can definitely say that if there isn't any form of bailout, which I don't expect there to be, there is going to be a $300 billion hole in our financial system.
from one institution, really, at this
No, no,
point.
no,
So,
no, 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 because institutions don't act alone anymore. That's now been spread, right?
Well, the
Because
risk has been spread.
you need to remember that 97 or 98% of their debt is US dollar denominated in Evergrande,
Yeah.
in Evergrande's case, which means that essentially it's debt that's held by US dollar denominated institutions,
Mhm.
right? So that means that there's going to be a $295 billion hole in US dollar denominated institutions, which means that that is going to be felt as an impact across US dollar denominated markets.
Yeah. No, I mean, you're not wrong in that sense. I still wish people wouldn't be so emotional, though. It's just a base.
That's fair.
I was doing a little bit of research yesterday. Maybe it was something I was listening to, but some of the big guys in the US, which is what you're saying, Stephen, have invested in Evergrande, but they're huge, and so the piece that they've invested is not going to affect them that much. Their share price will drop a few percent, which is what's happened. It's one company doing, I guess, a similar sort of plan to what the entire country of the US was doing in 2004, 5, 6, 7. So this is one company, not necessarily the entire country. Unless I'm wrong, are there there might be other companies doing the same thing as
No,
Evergrande, but if there's not, then this will be like another shakeout, and we go. And then
Yeah,
that's why
that's how I feel about it.
That's why I don't expect the Chinese government to bail them out. It's exactly what you're saying.
Yeah, okay. That works out. It was. I just saw something that it was on Bloomberg Economics. China's central bank injects 120 billion yuan, which is 18.6 billion US, into the banking system after concern over a debt crisis at Evergrande. So they put it into the banking system, not necessarily to Evergrande.
Not banks, not to Evergrande.
Yeah, but I mean, it's
so,
some way to stabilize the system and whatever, just to minimize.
That's just going to instill
shakeout.
confidence in people once we start to move out of this. And so as the more rocks we throw at us, at the cycle, I guess, everyone's getting worked up, we get crashes, and we keep recovering from all of these. It just starts to build confidence in people. And then that's when we go into that ridiculous parabolic run coming in a few years' time, when everyone's confidence is so high that the system can beat everything. The banking system can beat everything. The governments can beat everything. We're never going down again. That's what I remember from 2005, 6, 7. And I was working as a property manager. I was like 19 years old. So I was in property. These 30 and 40-year-olds selling property like, wow, this is never going down. We're going up. I'm like, yeah, I guess it is. We're always going up forever. That's all that was in the newspaper. The front covers were every day. Property up, stock market up. We're never going down. And you're like, I guess I'm screwed if I don't buy a property as a 20-year-old. I better go and buy something. Otherwise, I'm going to be priced out of this. The older guys, the 60-year-olds who have been investors for some time, they sort of knew and they saw it. They're like, things will cool down. But everyone else didn't see it. And that's what's happening again. You just got to wait for that new generation.
Euphoria cycle, right?
Exactly. That's what I see it's like an 18 to 20 year cycle. It's called the winner's curse phase. You go into those last couple of years, you're winning. It's a curse because then you get blown off. Just like in the 2017 bull market run up, we'll see it again in crypto. We'll see it again in everything because of the new generations who haven't learned from the past.
Yeah, absolutely. I mean, I would say that I was one of those. I wasn't around in 2017. So coming into this bull cycle, it's like, holy crap, when's it going to go? And, I was buying stuff in and not zooming out to see the macro and then going, ooh, ouch.
Yeah.
When everything went down.
That was to Stephen's point as well, when you said earlier on about the hedge funds having to sell off and the new guys, like you saw a post on Facebook, someone saying, why wouldn't you just put your profits into another altcoin? Like, well, because cycles eventually end.
Yeah.
And that altcoin's going to get wrecked. Yeah.
The thing that I see difference in that now is like the big difference now is it's not just a bunch of techie nerds in crypto, right? It's the regular retail investor, right? Like this age of mass adoption, I feel like is starting to trickle in now, and so these swings won't be as huge as maybe they once were, or Bitcoin halving might not be the catalyst to another bull run, or the end of a cycle.
Are you saying retail investors aren't as emotional?
No, I'm saying they are, but I'm saying that there's more of it and more money coming in, so there won't be this huge like strategic thing of like all the people that understood the cycle and why it happened before. The general person now doesn't understand those things, so there'll be more money injected.
Just because we have more volume
out in different, just because there's more volume, so it's more more stable, but it's also more volatile. It's a weird flush out, but to me, it just like it's exciting. As in, like anything that's pioneering or is going to go anywhere usually happens like this at the beginning, where it's just a bunch of scramble and chaos and crazy. And the fact that I see that now actually gives me more confidence for later that people are jumping in, they're taking that risk, they're trying to figure these things out. And so there's more people becoming experts, in
Mhm.
in what they're doing. And that this just means that there's more people around, there's more volume, like you said, and there's more happening. Generally, my tip is anytime you start seeing meme coins becoming prevalent, something's going to drop. It's like
Yeah.
the money's going into the wrong areas at this point.
That's unless we're all actually wrong and meme coins hold some fundamental value within the crypto
Well,
economy.
freaking look at Doge at this
In which,
point.
yeah, exactly, right.
Look at
And that's
Bitcoin. That's the biggest meme coin of all.
until
It has-
Taproot.
yeah.
Lucky
I'm
you're
so
in the
excited for
Cardano
Taproot.
ecosystem, hey?
Yeah,
God.
that's not a meme coin at all at this point.
Oh,
It's
so
getting there.
so-
It's getting there.
so
But it's
lucky. So
yeah.
lucky. I wouldn't want
Oh,
to be in any other ecosystem.
yeah, I know, right? Well, we're all
I
still
kid. It
we're,
is
we're
great.
still
It's
work.
just
It's
a lot of work.
potential to be great, and we're all taking the risk on it, honestly. I mean,
That's it.
and you do lots of stuff on it too, Jason, I know, but I mean, it's all still a risk for everybody building, right? If it goes down, our project, and there's our fortunes and our wealth for the future. So it's a
Yeah.
huge risk for anybody building on it at the moment, and especially putting all this. Most of our money, I think Stephen can say too, most of our raises is going to Haskell devs, right? And if the thing
Not all.
dies, yeah, if not all, and if the thing dies, right, and it's not going to get off the ground, it's not like these other chains that are really close together in their code base that we can just port to a new one. Like our
All your money's
entire
gone,
code
yeah,
is
you have
crap.
to restart.
Yeah,
Yeah.
you have to start all over again, and that's not nice, because all of the contacts that you build up for different VCs and stuff that were all in on Cardano will lose their money, and they don't want to invest in you for another project, and yada yada. So
And not to mention,
yeah, it's a big gamble. So people thinking like, look at us. I know some people will be like, oh, you guys are going to be bajillionaires. Like, probably not. For one, that's probably not. Oh, there goes my alarm. Perfect. You guys talk. I'll mute my mic.
All right. But that's a good point when it comes to the ecosystem, because I mean, I'm on the end of the retail investor, and they're always raving on about, I'm making money or I'm losing money. It's so easy for an investor just to sell out and move on to something else. But you guys are building your whole livelihoods on an unproven ecosystem.
Very unproven, and less and less
reminder.
proven as it goes. Yeah, I mean, we're hoping things would be a little bit more moved along at this point. But speaking of moving along, I think we're hitting our about 45, 50 minute. Yeah, about
Already?
50 minutes at this point. Yeah, I know, it's time flies. You've been having some really good there, Stevens.
Oh, nice.
Jack and Anis are like saying you're pretty awesome. It's taken a while
Thanks,
to reload
Anis.
for me. Can't pick a guy that's scared of needles.
I said, oh, nice, but yeah.
Yeah,
good. It's been fun. We've had a good.
Let Steve do the talking. He's the smartest, is what they say. Thanks, Crypto Roland. Yeah.
Yeah, thanks, Roland. You're so nice.
Yeah.
I'm sorry, Jason. I've got some fanboys from my Telegram.
No,
I noticed that, especially like
I love you
Cardano
all,
community.
by the way, guys.
Yeah, I think we're all
I'm dying
all
inside.
smart in different
I'll jump off
areas,
now.
and I knew coming
no,
onto
please.
this, I was gonna look like an idiot, like, because you guys are like, whoo, in
Not at
comparison to
all.
me on this
Not at all.
topic.
Yeah, not
Yeah.
at all.
So no, it's all good. We'll have a communications podcast at one point, and I'll blow you out of the water there, Stephen.
Oh mate, you would destroy me.
Yeah.
I should actually. I do want to add just my little side note.
Yeah.
If there is anybody you talk to anywhere in the Cardano ecosystem, doesn't matter how big or small their role is, they've already had 3 meetings with Damon, and they're probably halfway through organizing a project together.
Yeah, seems
it's
to
actually
be that
incredible.
Way.
I've never met anyone like it.
Yeah, I have other projects coming to me and be like, oh, so have you do you know about these guys? I'm like, yeah, I've had a few meetings. We're talking about doing some sort of podcast later on, or some other idea. It's pretty cool. So
it's also nice because any meeting I
interesting.
have, I know that we probably have Damon as a mutual contact, so we've always got something to talk about.
Yeah, and even this, I know most people have a hard time trying to get a hold of big YouTubers, especially like you, Jason, and smart people. And I was surprised, and thank you very much for coming on and talking about these things. It's been a pleasure talking with you off to the side, and for this as well, because I know this doesn't happen
you're
often
welcome
for you.
Yeah, I guess it's been such a quick journey that I still don't see it as a whatever I got. I think it's 212,000 subs now, because there's only 20
big,
or 30
man.
last year. Yeah. And it's just
That's
skyrocketed.
That's
Yeah,
amazing,
no doubt.
man.
From
Good
20 or
job.
30 to, well, look,
Yeah.
Wow.
at this point, so maybe I'll be at 200K by next year. No, I don't have time for that. So
Make some,
this is
make some
just for
Cardano
fun.
videos. Yeah.
Yeah, absolutely. Well, these are just
and
for
actually-
fun. This is supposed to be community engagement, and so
Yeah.
I'm glad to just come on and talk about whatever, open format. Yeah, Steve?
Jason,
Last.
just wondering, what city are you in Australia?
Gold Coast.
Gold Coast?
Yeah. You could
Oh,
come up
very-
here and be a little freer.
Yeah, I could.
a little
That
bit.
would require Palaszczuk to let me in.
I had a
Yeah,
burger
Yeah, you have to
thrown
get
in my
out of
face
your.
in the
You
Gold
got to get out
Coast.
of
That was
dictator
great.
down there. Yeah.
Sweet. So
Um,
guys, ending comments here. I just want to say again, check out our Fund 6 proposal. Look at that. Please go subscribe to this channel. Also, if you're not subscribed to Jason already, go and do that. And follow us on Twitter. All three of us use it. I know, Jason, YouTube's your main platform, but for me and Steven, it will
YouTube
be,
and Twitter. Yeah.
it'd be the Twitter. Yeah. So I'll try and get those in the description down below after I
Sure.
edit the video and everything. Add in everybody's links and to this one and the Fund 6. And otherwise, yeah, thanks a lot, guys. And next week's podcast will be with Ridotto, the gambling platform that is having their launch right away on CardStarter. And also, I think Cardano Paul will be in on that. We'll talk about the summit and stuff. So yeah, summit's coming up this weekend, guys. So go tune into that. We do have a good spot on there. We've got the green light from the IOHK yesterday to talk about it. So we have an interview with our CTO Jonas and a product overview from us, which I'll share with you guys right after this because I can now. So awesome.
No
All right.
worries.
Thanks, everybody.
Lovely. Thank you. Nice to meet you too, Stephen. Thanks very much,
Lovely
guys.
to meet you as well, Jason.
Yeah.
And Damon, always a
Yeah.
pleasure.
Wonderful. Thanks, guys.